Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Tuesday, February 8th. It is 7 a.m. straight up as I'm starting the video. And as always, please run the player at 1.5x for max efficiency. Taking a quick look at futures. A lot of red on the board, but not terribly so. Bitcoin's down 1%. Equities I'm just going to call flat, but they are red across the board, maybe a tenth or two. Oil down 1.5%, copper down 1%. Over on the macro front, not a lot today. International trade, red book, NFIB, small business optimism index, that comes out I think at 8:30 or 9. Then on the earnings front, we got Pfizer before the bell, BP, Coty, Fiserv, bunch of other ones. After the bell, Peloton, they're probably going to add some color to, buyout interest, outlook going forward, all that kind of stuff. Chipotle, Lyft, and then Spirit Airlines. Of course, they were in the news yesterday that Frontier is going to merge with them. It came off as a merger of equals, but Spirit took a pretty good jump on that news. So I'm sure they will add some color to that, those merger talks and what they see going forward, etc. Maybe get some color on how traffic is going on domestic air flights, which is mostly what Spirit and Frontier do. So let's get into the charts. Not a lot to go over today. Yesterday was just a range-bound day, narrow ranges. I think we're more or less at resistance, and so we're going to have to see which way this whole thing resolves. So let's go through the charts really quickly. Here we've got SPY daily, small bar here coming up off of the tradable bottom. We had a kickback rally, then a gap down, and we've spent 3 days below. I think really the key on SPY is 450. If you wanted a big line on, a big crayon line on the chart, that would be the place where I would put it. Any kind of durable break above 450 that holds, that brings this open gap into play. It would, any kind of move higher would take out this downtrend resistance line and then, open the door for a run back up to the top to 470. As long as it stays below, however, you've got to have an open mind towards a back test of this prior low. And usually what happens is, even you can see it here, we took a move down, which was pretty sharp at the time, just, a couple days, came down here to 450. We went all the way back up to the top of the box. And then 3 days later, we were down at the bottom, revalidating that low. So here the situation is fairly similar in the sense that you got a fast move down where the bears ran out of power, gave us that tradable bottom, and now we're up here. I always have that prior low in focus when I'm trading something, just as a potential place for price to come down and revalidate it, especially because this move was so fast. Usually what happens is you get a bounce and then a revalidation, and then we find out, do we take the next leg lower, or do we find more or less a double bottom here and a bounce up? Too early to tell. But all I can tell you is, as long as price stays below 450, I think you have to, have a bias to the downside until evidence presents itself that something is changing. Here you see it. We've got a lot of trading right under 450, and it's poked its head up a couple times above 450, but really unable to mount any kind of hold there or any kind of run on this gap. So, and here too, you've got a nice downtrend line to factor into your narrative, I guess, as far as price taking that out on the upside would be important. SPY 30 minute, again, we've got this level at 450. It wouldn't take a lot of imagination for me to put in a little triangle here, if you will, across the tops of these. I don't think it's majorly consequential or important to do that, but just as a visual reference. And so you see I've got an uptrend line here that looks fairly important, quite a few touches. We had a lot of touches through here. We had a touch here. We had a touch the other day, and then we had a touch on the close. So we've got quite a few touches along this line on this uptrend on the 30-minute chart. If we break below this 448 and we get a reach down to 444, that's going to be your first, on this short-term time frame, that would be a validation point where you would expect a bounce. But if it doesn't, then that starts opening up this downside rather quickly, because that was where we had the big run up. And notice that below 444, the volume over price profile backs off a little bit. So there's going to be less technical support on the way down because of that fast move that we had going forward. So this 450 remains a big level overhead for price to break out and possibly get into that gap. Qs, very much the same thing. The big line on the chart for me is really a band between 360 and the 200 at 363. Price has to get above the 200 before you can really start sinking your teeth into it for a long trade. If nothing good happens to price under the 50, certainly not much happens good for a stock once it loses the 200. In fact, most technicians would tell you, below the 200, it's on the wrong side of the whole chart. So here we are kind of stuck below, and you can see over the last 3 days, we've had 3 reach up candles come up to the 200 and then back off. So for today, I would be keyed in on price wanting to hold this 355 area. If it can't, you're probably going to go to 350. If it can hold it and mount a little rally, potentially up towards 363. And you can just see this little consolidation zone here where price has just been chopping along for the last couple of days. We've got the open gap above. We've got a very nice, crisp downtrend line here. And so I think what you can do is, in your pre-market game plan, kind of pre-decide how you're going to handle price today, especially as it relates to this gap and the 200 EMA at 363. So for instance, I've got the gap here more or less at 362. And so we know the 200 is at 363, and we've got a downtrend line coming off the tops right in here. Let's just call it 364. If we get a move higher, are you going to get long on the gap entry, knowing that the 200 is $1 above and the downtrend line is, say, $1 above that? Or are you going to wait for a breakout of both the 200 and the downtrend line, right? So, in other words, making price prove that it's got the horsepower to break out. If you were to get a breakout here on price above this downtrend line, I think you've got a much higher probability of getting into a trade that would have the potential of lasting a while. You've got the 50 up here at, let's call it 375. So if you got in around 365, your first target would be the gap fill. Your second target would be 370, and then your third target would be the 50, and then a move up to 380 to fill this gap. And remember, 380 is our key resistance level. So there's definitely a lot of work to do on the upside if the Qs are going to make a run. So let's look at one other scenario and we'll move on. You can see we're in a range here between 360 and 352 and a half. Let's say they do some opening selling and they bring price down and you don't have a position. What would be your first bullish move? Well, that would be a move back above 352.50. That would be your buy point. So get long on a breakdown move and then a recapture, and then you've got the potential for a more rewarding upside move. Why? Because once you recapture that level from below, your target would become 360. So that's $7 right there. And then if you get lucky, you could get a move up to the downtrend resistance line at about 363. So you'd have almost $10 of potential upside on that type of a move rather than, getting long on a gap entry when you got, a lot of heavy resistance right above the much more muted type of upside potential. Here it is on the 30-minute chart, just giving you a little breakdown of these levels, a little more resolution there. IWM, really to get something meaningful, sustainable, you got to get a break above 204. Why? You've got a declining 20 EMA there. You've got multiple rejections along 204. So really on the daily chart, you got to get a break above 204 to really get the potential of something moving to the upside. On the 2-hour, we can see here rejection. I'm going to call that a rejection yesterday. So if along this line at 200, if you got a break above there, that could be a level where you could get long just for a move up to 203 and then see if you can get a move higher. But otherwise, I think you got to be looking for the downside, especially if price moves in below this downtrend line. And you can see it here. lines come in a little bit different, get some different resolution. So if you were long or held overnight, I would be putting your cutoff at 198. And if you weren't in it and you saw a price come down to 198 and hold, you could get long there for a potential bounce up to around 203. And you can see where that line of resistance has been. Facebook, I got to do some work on this chart. You can see it's all compressed because of the massive gap down. But this is a good illustration of how our bracket trades work. Remember, we had the gap down. You set up your bracket at the high or low of the first day, and then your second day trade is following price in whatever direction it goes out of the bracket. So you can see our bracket trade here, the low, I'm just gonna, I don't know what it is exactly. Let's say it was 238, something like that. You got to move lower, so that would have got you in. And then you got follow-up yesterday of over 5%. So, you know, right now, if you would have followed the bracket trade rules, you've been short for a couple days. And now what you can do is set your stop or move your stop according to how price moves, so you don't give that all back if there's some kind of a rally. I would set your stop right now basically at break even, or if you wanted to run it tighter, run it back, you know, at 50% of this candle and just stay with it as long as it keeps moving down. But that turned out to be a nice trade. Apple didn't do a whole lot yesterday. We moved from the top of this support level to the bottom. So we moved from 173.50 down to 172. I think that's your pivot now. You get a break below, you're going to go to 170, then 168, 50-ish with 50 EMA support below. You get a breakout above 173.50, your upside target would be 176. Tesla, small range day, 935 is your resistance level. And you're sitting here right at, that's 907. You can call it 910 if you want. Use that as your pivot. Doesn't matter what I would do. What you can do is be long above 910 and look for 935, or short below 910 and look for 880. You know, in this environment right here, I'm more or less, bulls got to prove it. So for me, I would be, you know, bulls, show me that you can break out above 935 after, you know, 8 rejections. Show me that you can break above. For me, on this expensive of a stock, I'm not going to try and, you know, fine tune this thing from 910 to, you know, 935. You got to be a real sharpshooter, and I'm not that good on Tesla. So for me, I would want to wait and see, let 935 get taken out, and then you can look for a more sustained move, because all this consolidation would have happened, and then all this will be support once price breaks out. That's my own personal style. Microsoft remains weak. It didn't really have a big move. It was down 1.63%. So we're down below this band of support between 305 and 302.50, and we're down testing this prior low. I do have a short on this one. I have what do I have? I rolled down to 300 puts for Friday, so we'll see how it goes. But I think this one is vulnerable down to 295, depending what the overall market does. Amazon, interesting day. I mean, I say this in the trading room when I post charts. This is why I draw the lines. Look where price stopped, right at the top of the gap. So check that off your technical checklist. We came up, filled the gap yesterday, and then immediately reversed. And that doesn't look like a lot, but that's $100 from the top of this gap to here, 32.50 down to 31.50. That's $100. That's a nice little trade in and of itself. But the real deal is this gap here. So you got to have your eyes peeled on 31.12. If there is some kind of a downdraft and price loses this 31.12, then you got a potential move to come all the way back to 27.75. Once you enter the gap, the default target is the bottom of the gap. And yes, there will be bounces along the way, but that's a big opportunity. So definitely have an alarm set on your charts there. Google, we talked about this yesterday. This was a good trade. Lean short as long as price cannot recover this 910 zone, and you got a 3% move. So we had one opening green candle, and then it immediately reversed and really never looked back. So now, nice example of what we just talked about on Amazon. We had the breakout, then we lost the top of the gap. And so that was at 910, and now we're down at 27.85. So if you get short against the gap entry, I mean, you're well on your way to a super nice trade. Just be aware of this uptrend line and know where the bottom of your gap is. If it were me, I'd be covering that trade into the bottom of the gap and into the trend line. And then if the market goes to hell in a handbasket, if price breaks this trend line, then you can reinitiate your short and look for a move back down to retest these lows. So that's what I would do in that situation. This has been a market where if you got profits, take them, because it's been really choppy and you think you're riding along on a really nice trade and then it reverses and cuts into your gains. I really like the idea of going regularly to the bank with your winners and peeling off that premium, and then staying long more or less at or staying in your trade at the money. Netflix fade, little bounce, didn't really do anything yesterday. It's below this little trend line, not a strong trend line, but just there as a visual reference. Just keep in focus this gap, because a gap entry here would target something down around 385, and if the market gets really weak, right on down to 370. On the upside, I think you have 410 alarmed. Get a break above 410, you got an opportunity to retrace this down leg and move back up towards the midpoint. Semis, consolidation day. I would focus on 273, 272.50, and then back at this level at 270. If you get a break below 270, I think it's going to open the door. If it can hold here, got a gap to fill above, and you can see that really hasn't shown any inkling yet of wanting to fill that. Let's wrap up with the ARC complex. I've zoomed down to the 60-minute chart. For those of you that want to fine tune it, we've got triangles forming on most of the charts where, if you were to get a breakout above 32, could open the door to 33.50. You get a breakdown below 31 and then below 30, then I think it opens the door back down to these lows. So you'll have to decide, how you want to fine tune that if you're interested in the ARC complex. Here's ARC G, little different scenario, more of an ascending triangle with 51 being resistance. I've got an alarm there just in case there's a breakout. A breakout at 51 could target a move up into 54, 55. That would be a worthwhile short-term trade to make. I've also got an alarm at 47.50 for the downside. Right here, I'm not willing to get short with this large support bar here. So I've just got 47.50 alarmed for a potential short. ARC K looks a lot like the ARC F1 that we just looked at. Got a symmetrical triangle here. I've got 77 alarmed for a long, and I've got 69.50 alarmed for a potential short. So you may want to look at that. And here's ARC W, the ARC Web, another triangle. I'm not sure if I have any alarms here, but what I would do on the lower side, I would probably, because this is where the large volume over price bar is, I would probably set my alarm at 91 because of this void, and then see if you can get a move back through the bottom of this triangle, and then that would open the door for a move toward 82. I don't want to mess with this one on the long side until 98 is taken out. I think these Ponzi's, these bubble stocks, are on borrowed time. I'm viewing any upward move as a counter trend rally. Squeeze out some of the shorts, etc., and then get ready for the next leg down. I really think that's what's going to happen here. If you go look at the components of a lot of these stocks, they still have PEs literally in the thousands, even after getting cut in half, which just tells you how absurd some of those valuations were and remain in those stocks. So let's wrap it up there. If you're new to the channel, thank you so much for spending some time with me this morning. I really appreciate it. If you appreciate technical analysis or want to learn it, please hit the subscribe button, the alarm bell, the thumbs up, the post notification content. And then what you can do is jump over in the show notes. You'll find a place there to a link to the website where you can drop in your email, and then you'll be part of the team. Morning, noon, or night, whenever I publish anything, you'll get it right in your email box. You'll also find a donation button if you appreciate the content and want to help me keep the lights on over here. I'd certainly appreciate any donation you want to make to the channel. So please consider that. Otherwise, we just got to be patient here and wait to see which way this market breaks and be ready for it, either in a bullish way or a more bearish outcome. Stay really flexible here. Don't get too far out over your skis. in any one direction, and let's see where it goes. This has been Chris Buss with Traders Profit Compass. Talk to you next time.